What's up, everybody? This is Coach Mike, founder and CEO of Walk On Consultants, where I teach people how to get started investing in the stock market. I also help people who already invested in the market. If you're looking for a person to bounce an idea off of, if you want to learn a little bit more about fundamental investing or technical investing, hit me up. You can follow me on Facebook. I'm on Instagram. I've got a YouTube channel. So today's video is going to be posted on YouTube. I also run a monthly meetup group for free where I talk to people every month about investing. Nice group of people, and it's a wide range of investors from beginners to advanced, and everyone is welcome. Last month I did a video for ETF investing. This month I'm just going to do a wrap-up, a recap of how the market's done this year, and really backtrack to look at my video from last year to see how on point I was with my prediction for the market for this year. Now, again, remember, the stocks that I mentioned are not recommendations. I'm not giving specific stock advice to you or anyone else or any specific stock, but I'm throwing out food for thought. I'm throwing out ideas that you can really go home and do your research on and think about the stocks that I mentioned. So again, remember that this is for educational purposes. It is not specific stock advice because everyone is different. Everyone's portfolio is different. Everyone's risk tolerance is different. So take it with a grain of salt, but I wanted to look back, hold myself accountable for some of the stocks that I talked about. Now, some of the stocks I purchased, some I didn't, but that's the whole point. You got to have a list of things that you're looking at on a day-to-day basis. And so with that said, I'm going to go to the video, take a look. I'm going to share my screen and take a look at some of the stocks that I talked about last year. So first thing, here's my YouTube channel, Coach Mike. You can see with the big W for Walk On. So make sure you follow me on YouTube. The videos I'm talking about in particular, and I'm not going to play the video right now, but if you look, Black Friday, I made a video last Black Friday because the market crashed. The market was down 2% and everyone was panicking. And, you know, I know a lot of investors have been conditioned to buy the dip, but I just kind of felt something was off about this market correction. It was a pullback. I can't say really a crash, but a market pullback. And it just didn't feel right. I wasn't going to buy the dip. So I mentioned, do not buy the dip on this one. And what had happened was we thought the coronavirus was over and they had discovered another variant, the Omicron variant. And so we went back indoors. And so the stocks that kind of got hit were the travel stocks, you know, your Airbnb, your airline stocks, your cruise ship stocks. They got hit pretty hard. Check out the video. Again, check out the Black Friday video. You'll see what I'm talking about. The ones that did well were the Modernas and the Pfizers because they make the vaccine. So of course, those stocks did well. So I had talked about maybe sort of rotating your portfolio into more consumer defensive stocks, consumer staple stocks, utility stocks, but cautioned you, warned you about buying the dip. And then what happened 1 week later, the next Friday, December 3rd. So you had Black Friday, the market had a pullback, and then December 3rd. Again, check out both of these videos and you'll see the details. But again, the market was down 1%. So you had Black Friday, the market down 2%. The very following Friday, the market was down 1%. And again, I talked about rotating stocks that are in your portfolio, not selling everything. Don't panic. Don't get out of the market, but maybe rotating some of the stocks in your portfolio. Now, the one thing I noticed, there was a stock that got hit really, really hard was DocuSign. It was down 42% in one day. And I was like, wow, that stock got punished. And I've looked at, I'm coming back to the DocuSign, but it got punished again this year, down 62%. So I looked at DraftKings and ZipRecruiter and I didn't buy them, but I'm glad I didn't buy them because they were down again this year. And of course, last thing I want to say on the market in general, crypto got crushed. You know, crypto was, I think, somewhere in the ballpark of like $50,000 and now it's like 17,000. So let me come to my first stock of the day is DocuSign. DocuSign on the week after Black Friday last year was down 42% in one day. It was like a $230 stock. And then it ended up like $135 stock in one day. And so you might think, hey, let's jump in and buy the dip because that was what we've been conditioned to do is buy the dip. And I was like, I'm not sure if you want to do that. And look, a year later, the stock's at $54. So it's down another 62%. And I know you may be thinking, how can it be down 42 and 62? Well, that's 104%. Doesn't work that way. The calculation is based on where it previously closed. So from the previous close, it was down 42%. And from the previous close a year ago, it's down 62%. But nonetheless, this stock has went from a probably $300, $250 stock to $54. So maybe now is the time to jump in. Who knows? but I wouldn't touch it personally. However, look at the market. The market was down 16% so far this year. So you're not, it was kind of hard to find some winners. The only winners really this year were energy stocks, and even some of those have been pulling back. If you remember early in the year, when gas was $3, $4, $5 a gallon, gas has come back down to reality now, but it's still not cheap. So let me take a look at Bitcoin as well. As I mentioned, Bitcoin, it was over $52,000 a year ago, 52,000. And now you got Bitcoin at 17,000 and change. So is now the time to jump in? I know very little about crypto, so I cannot make any kind of recommendations, but what a drop of 52,017. And what strikes me the most is that I get questions all the time from people who just started investing. This is not something you want to make your first investment. And this is something I think for more advanced investors where you already have stocks and now you want something a little bit more risky. Don't start off. If you've never invested before, please don't start out with crypto. Start with some basic stocks and then work your way up to more riskier type assets, but please don't start out with Bitcoin. So let me just take a look at some of the stocks that I had mentioned. I had talked about getting defensive and going into some consumer type stocks, right? I mentioned Verizon, Conagra, Nestle, Philip Morris, Johnson & Johnson, Pepsi, Procter & Gamble, Kimberly-Clark, and Hershey. So let's see how they have done versus the market. So we know the market in that same period was down 16.5%. Let me tell you, the only loser in that group, or the only underperformer in that group, was Verizon. Verizon was down 24% in that period where the market was down 16.5%. So Verizon lost more than the market lost. But all the other picks that I mentioned did pretty well. Conagra was up 20%. Nestle is down 14. Now, although Nestle did lose money, it lost less than the market. So you got to keep things in perspective. The market was down 16.5. Nestle lost 14, so you're still winning. Philip Morris is up 3.7%. Johnson & Johnson up 7%. Pepsi up 8.3%. Procter & Gamble, again, a loser, but lost way less than the market. Procter & Gamble was down 2.2%. The market's down 16. Kimberly-Clark only up a little bit, up 0.71%. And Hershey, the big winner, up 27.5%. So I just want to pat myself on the back because I did make the right call to switch into some defensive stocks. I didn't buy all of those. In fact, the only one I bought was Procter & Gamble, which I had already owned. I was going to buy Hershey, but it kept going up and up and up, and I didn't want to chase it, so I didn't end up not buying Hershey. Last thing, let's take a look at some of the losers from this year. And you'd be surprised at some of the most popular, well-known names. So Tesla down 50%. I mean, Elon's is in some trouble now. There was a time when Tesla was the only electric vehicle car company, but now they got lots of competition. So Tesla was down 50%. Plus, he's got SpaceX to run. He's also he bought Twitter. And so he's got his hands full. He can't run all three companies at the same time. So I think, here's another prediction, right? I think maybe he's going to have to designate a CEO to run one of those three companies. He can't run all three companies. So that's one of my predictions, that Tesla or SpaceX or Twitter will be delegated to somebody else to run, because I think he's going to face a lot more competition from other EV makers with his cars. Apple, another popular name. Everybody owns Apple in their portfolio, down 18%. Google down 37%. I did jump in and buy some Google this year. Netflix down 49%. Bitcoin down 66%. Huge loss. Meta, Facebook, formerly known as Facebook, right down 65%, and Amazon down 47%. I remember people asking me about the Amazon split. Should I buy Amazon? It's going to split. And I'm like, hey, don't worry about the split. It's just really not, that's not why you want to buy the stock. You want to buy the stock because it's going to go up. People think the split's going to make it automatically go up. It doesn't work that way. So Amazon was down 47%. A lot of big name companies were down huge. Again, when you're comparing how you did, compare how you did versus the S&P 500. S&P 500 was down 16.5% so far. And a lot of these big tech names, the Netflixes, the Bitcoins, the Metas, the Amazons, were down way more than the market. So I'm thinking maybe next year, you just buy the S&P 500, buy the ETF SPY. That may be your best bet. I think next year will probably be a flat to a minimally gained market. The Fed's still raising rates. They're probably going to raise it a half a basis point. this week and probably another half a basis point in the spring, or maybe a quarter of a point. So I think the second half of 2023 will be better than the first half of 2023. But it's going to be another choppy market. It's going to be flat, a lot of portfolio rotations going on. So those are my predictions, right, for the year coming up. But again, I always throw out food for thought. This is not specific advice because I don't know you. I don't know your portfolio. I don't know your situation, your risk tolerance. So yeah, I can't give you specific advice, but take what I said as food for thought. Go research some of the names I mentioned, go look at the market, and you decide which ones you think you should buy. And again, follow me. If you like this video, please like and share and subscribe. And do me a favor, leave a comment at the bottom. Let me know what you think about these videos and my opinions. That'd be helpful to know. So thank you guys. Enjoy the rest of this year. Hopefully we'll get a Santa Claus rally. Who knows? But we're looking forward to maybe a Santa Claus rally for the remainder of 2022. This is Coach Mike, founder and CEO of Walk On Consultants, y'all. Hope you have a good day.